Like, share, comment, and subscribe. Follow Exodus Business Development to learn more. Transferring assets to your LLC is an important step in formally establishing the LLC's ownership of business-related property. This process helps protect personal assets, simplifies accounting, and ensures compliance with the principle of limited liability. Below is an explanation of the process and its purpose. Purpose of transferring assets to an LLC. 1. Legal protection. By transferring assets to the LLC, you separate your personal assets from the business. 1. This ensures that, in the event of a lawsuit or debt, your personal assets are not at risk. 2. Ownership clarity. The LLC legally owns the assets, which ensures that they are used exclusively for business purposes. 3. Tax benefits. Transferring assets to the LLC may allow you to take advantage of business-related deductions and depreciation. 4. Business credibility. Transferring ownership of assets makes your LLC more professional and credible in the eyes of clients, lenders, and investors. Process for transferring assets to an LLC. 1. Determine which assets to transfer. 1. Examples: real estate, vehicles, equipment, inventory, intellectual property, or bank accounts. 2. Exclude personal use items that aren't used for business purposes. 2. Document the transfer. 1. Bill of sale. For tangible property, e.g., equipment, furniture, or inventory. 2. Assignment agreement. For intangible assets, e.g., intellectual property or trademarks. 3. Deeds or titles. For real estate or vehicles, file documents with the appropriate state or local authority to transfer ownership to the LLC. 3. Update titles and registrations. 1. Real estate. File a quitclaim deed or warranty deed with your local government office to officially transfer property ownership to the LLC. 2. Vehicles. Update the vehicle's title with the Department of Motor Vehicles, DMV. 3. Business licenses, permits. Transfer business licenses or permits to the LLC if required. 4. Open a business bank account. 1. Deposit all business-related funds into the LLC's bank account. 2. Close personal accounts used for business transactions. 5. Contribute assets as a capital contribution. 1. Transfer the assets to the LLC in exchange for ownership equity in the company. 2. Document this in the operating agreement or a separate capital contribution agreement. 6. Record the transfer in business records. 1. Update the LLC's balance sheet to reflect the transferred assets as company-owned. 2. Maintain clear records for accounting and tax purposes. 7. Notify third parties. 1. Inform lenders, clients, or vendors of the asset transfer if applicable. 2. Update contracts or agreements to reflect the LLC as the owner of the transferred assets. Tax considerations. 1. Contributions. Generally, transferring personal assets to your LLC as a capital contribution is a non-taxable event if you are the sole owner. 1. However, consult a tax professional to understand potential implications. 2. Depreciation. Assets transferred to the LLC may be depreciated for tax purposes, which can lower your taxable income. 3. Gift tax. If the transfer involves co-owners, it could trigger gift tax implications. Important tips. 1. Work with an attorney or tax professional to ensure that all transfers comply with state laws and IRS regulations. 2. Keep personal and LLC assets completely separate to maintain liability protection. 3. If the LLC has multiple members, document the value of the transferred assets and the proportionate ownership interest for each member. By properly transferring assets, you establish the LLC as a legally distinct entity, which is crucial for protecting personal assets and ensuring smooth operations. Don't forget to like, share, comment, and subscribe. Follow Exodus Business Development to learn more.